Good morning, folks. My name is Chris Chandler, President of PFL, and we hope that everyone had a great Super Bowl weekend. What a game. The Dow closed higher on Friday of last week, but was down 56.74 points week over week. The S&P closed slightly higher on Friday of last week, but was down 46.02 points week over week. The Nasdaq closed lower on Friday of last week and was down 288.84 points week over week. And overnight trading, Dow futures traded lower and are expected to open down this morning 48 points. Oil prices settled higher on Friday of last week and higher week over week. WTI traded up $1.66 per barrel on Friday of last week to close at $79.72 a barrel, up $6.33 a week over week. U.S. commercial crude inventories increased by 2.4 million barrels week over week. U.S. crude inventories are 4% above the 5-year average for this time of year. Total motor gasoline inventories increased by 5 million barrels week over week and are 6% below the 5-year average for this time of year. Distillate fuel inventories increased by 2.9 million barrels week over week and are 15% below the 5-year average this time of year. Propane and propylene inventories decreased by 4.3 million barrels week over week and are 25% above the 5-year average for this time of year. Propane prices were down 7 cents per gallon week over week, closing at 85 cents per gallon, down 46 cents per gallon year over year. Oil is lower in overnight trading, and oil is going to open down $1.10 per barrel. Total North American weekly rail volumes were down 1.73% in week 5 compared to the same week last year. 7 of 11 of AAR's major traffic categories posted year-over-year increases. Most significant decrease was from coal, which was down 12.86%. Largest was motor vehicle and parts, which was up 20.43%. North American rig count was up by 3 rigs week over week. U.S. rig count was up by 2 rigs week over week and up by 126 rigs year over year. The U.S. currently has 761 active rigs. Canada's rig count was up by 1 rig week over week and up by 31 rigs year over year. Canada's overall rig count is 250 active rigs. Overall, year over year, we are up 157 rigs collectively. Folks, we have a few things that we're watching for you. We are watching oil companies. They are doing well. $200 billion in combined profits last year, and Uncle Sam is noticing. Go figure. As the Biden administration is calling on Congress not just for a windfall tax, but a 4% tax on stock buybacks. This would mean 4 times higher than the similar taxes was enacted last year. The proposed tax is not likely to pass under the controlled Republican Party, but who knows what we're going to get taxed on next. Yep. You as a shareholder, if you own an oil company, you're paying extra tax yet once again. We are watching Class 1 headcount. Headcount of the Class 1 continues to accelerate. At the same time, rail traffic continues to soften. We are expecting to see increased levels of service if this trend continues. See PFL's Rail Report for further details. Please read PFL's Rail Report today for further details as it relates to today's podcast. In addition, we highlight the latest refinery runs. Petroleum railcars are up week over week. See details in the report. In addition, we have import-export numbers, petroleum-related products. We, of course, have quite a few detailed graphs for your viewing pleasure. Also, in every weekly report, we have the latest and greatest on what's for sale, lease, and sublease out there. Please call PFL for all your railcar needs, including storage, leasing, subleasing, cleaning, repair, flaring, nitrogen generation services, transloading services. Well, we hope everyone has a great, safe week out there. Thanks for listening, and make sure you read our report. Thank you.